So, over the weekend, the world watched a conflict in the Middle East that had been simmering for a long, long time just explode. And it sent a massive geopolitical shockwave across the entire globe. The impact on the economy, on financial markets, it was immediate, it was profound. Okay, let's dive into exactly what happened.
This is what kicked it all off. This one sentence from President Trump confirming that joint U.S. and Israeli military strikes were happening. That statement set off alarms in every major capital and on every single trading floor in the world. This was it. The standoff was officially over and an open conflict had begun.
But look, this didn't just happen in a vacuum. The stage was set for this months ago. You have to go back to last June, when a short but really intense 12-day war with Israel showed some serious weaknesses in Iran's military. Then by December, the country's currency completely collapsed. It wiped out people's savings, and that led to these huge protests all over the country. So the strikes on February 28th, they were really the final match thrown on an already smoldering fire.
So what's the first thing that happens when a conflict like this kicks off? Well, it sends a shockwave right through the world's energy supply. And we can think of this as the first ripple, the global oil choke point.
And this right here, this is the geographic heart of the problem, the Strait of Hormuz. It's this incredibly narrow strip of water, just about 21 miles wide at its tightest spot. But here's the thing, it is the only sea route that connects all the oil producers in the Persian Gulf to the rest of the world.
So just how important is it really? Think about this number, 1/5. A full 1/5 of the entire world's seaborne oil has to pass through this single, tiny, and now incredibly vulnerable choke point. It is, and this is no exaggeration, the world's energy lifeline.
And for some countries, that dependence is even more critical. Take India. Its reliance on the Strait of Hormuz is huge. Nearly half, 50%, of all its crude oil imports have to pass through this one contested waterway. You can see how the economic stakes just couldn't be any higher.
And boom, the economic fallout was immediate. We saw Brent crude prices jump instantly from $70 to over $72 a barrel. But honestly, that's not even the real story. The real story is the forecast. Analysts are now warning that if this choke point is actually disrupted, we could see oil prices surge to $80 or maybe even a staggering $110 per barrel.
All right, so that oil shock, that leads us straight to the second ripple, because that immediate panic over energy quickly spread, triggering a massive sell-off across financial markets all over the world.
And look, this wasn't just a regional issue. What we saw was a completely synchronized global plunge. From Wall Street in the US to Dalal Street in India, all the major stock indexes just dropped like a rock. It's such a stark reminder of how deeply connected our global economy really is.
So if everyone's selling stocks, where's all that money going? Well, this is a classic flight to safety. Investors basically sell anything they see as risky, and they run towards so-called safe havens. Gold had its best month in years, surging almost 11%. People piled into U.S. government bonds and stable currencies like the Japanese yen and the Swiss franc. And you can see even things like Bitcoin, often seen as a risky asset, took a hit, dropping below $64,000.
Now, of course, a shock like this doesn't hit every business the same way. Some sectors really took it on the chin. Oil marketing companies in India, for instance, got squeezed hard by those higher crude prices. And companies with direct business in the region, like Adani Ports, which has a stake in Israel's Haifa port, well, their stock prices fell because of all the instability. There is maybe one small silver lining. For some export-focused sectors, a weaker local currency can actually help their earning.
Okay, let's zoom out for a second. Beyond the immediate market chaos, we have to talk about the third ripple, the huge, long-term geopolitical dominoes that are now starting to wobble because of this crisis.
Just think about what a full-on regime collapse in Iran would mean for its biggest allies. For Russia, it would be a total catastrophe. They'd lose their #1 supplier of drones and artillery for the war in Ukraine. For China, it's a completely different kind of crisis. They get about 90% of their crude oil from Iran. A collapse there would trigger a massive energy security crisis for Beijing.
Which leads to the million-dollar question. What actually happens inside Iran if the current regime falls? Well, analysts are basically gaming out 4 main scenarios. And let me tell you, none of them are simple. You could get a horrifying Syria model, where the whole country just fractures and you get endless proxy wars. There is some talk of bringing back the old monarchy, maybe a more modern version, like a constitutional monarchy. And then there's the very real possibility that the powerful Revolutionary Guard just ditches the religion and takes over as a straight-up military dictatorship. The level of uncertainty here is just immense.
So after all this massive global story, it brings us to our final ripple. Because all this turmoil creates a huge dilemma for every single individual investor out there. What on earth do you do now?
On one side, you have this feeling, this raw, cynical take captured perfectly by a user on Reddit. It's this sense of being completely helpless, right? The belief that as a small retail investor, you're just caught in the crossfire of these giant foreign institutional investors and geopolitical forces you can't control.
And then, on the complete other side of the coin, you have the advice from the professionals. This quote from Kranti Bethini is the classic long-term strategic playbook. Stay calm, don't panic and sell everything, and actually try to use these big drops as a chance to buy into the market for the long term.
And that is the crossroads where every investor is standing right now. It really leaves us with one final crucial question to think about. Is all this chaos in the markets just a temporary blip, a knee-jerk reaction that will blow over in a few weeks? Or are we actually seeing the first violent tremor of a brand new and much more uncertain economic reality?